it is Tuesday, the last day of February. The Ides of March are upon us. And once again, Marion Syverson joins me for Money with Marion. Marion, welcome back.
Thank you.
And we're talking a little bit about the volatility of the stock market. A lot of people think it's anything but a scientific thing, but there is a certain science that goes into up markets, bear markets, bull markets.
Yep, and there's a science to how we can invest to deal with all of that lunacy.
Okay.
So I've got 4 points.
Very good.
First one is diversification will help moderate risk.
Okay.
And we already know that. I mean, if you're floating versus if you're trying to dive into the water, you're able to have a better opportunity to stay above and not drown versus diving in. So the more pointed you are, the more detailed you are, the more specific you are in your investing, it may not help your risk. Okay, so diversification, spreading it out helps. The next one is, I went to school for finance, so I could talk this stuff all day long. This is not the touchy-feely of personal finance. This is efficient market. An efficient market says that there is information out there that is helping people make the very best decisions all the time. And though we may not have it because we're not listening all the time, there are people who have the most up-to-date information, and they are trading on that, and that is providing us with a truthful, transparent, and efficient market. The next one is irrational behavior in the short term. Sometimes the market is wacky for a short period of time, and it has to do with emotion and not with you've watched people make crazy decisions. Maybe you've made crazy decisions, not you, of course.
Case in point, right after the election, the stock markets rose dramatically.
Exactly, and have been. They're almost up 3,000 points since the election. When it had been predicted they might go down. So now the reason for that is manyfold and not necessarily irrational, but it could be irrational if the procedures and processes that Mr. Trump says he's going to do, he doesn't do. But in the meantime, we think it will be rational. And the last one is, over the long term, there is stability. So there is a book called Stocks for the Long Run. I mean, you can study from 1700 to now and see how the stock market has done. It will, over time. We hear stories about grandma died, and in her scarf drawer, we found a stock certificate that is now worth 100,000 times more than what it was. Because over time, things will work out. So try to keep these things in mind. There are short-term losses, but over time, things do work out. If you're invested in companies that stay in business, things will work out.
So not only in school should you pay attention in math, you should also pay attention in science.
Yes, it's very good.
Okay, Marion, thank you so very much. And if people want to contact you, how do they do that?
NormBegaFinancial.com.
All right, thank you very much.
Thank you, JR.
JR Mitchell Report will be back right after this.